All right, let's get right into it. Everyone's been talking about the AI supercycle, and the big question on everyone's mind is it over? Well, today we're going to tackle a pretty big and maybe even controversial idea. It didn't end, not even close. It just moved. And if you don't know where it went, you're probably looking in the rearview mirror. So here's how we're going to break it all down. First, we'll talk about what I'm calling the shovel maker's peak, that huge hardware boom. Then, we'll dive into the massive, and I mean massive, pivot to something called inference, and how AI agents are at the heart of it. After that, we need a serious physical reality check before we get into why a 2026 reckoning is almost certainly coming. And don't worry, we'll end by showing you exactly where the smart money is headed next. In this quote right here, this is the core of everything we're talking about today. The gold rush analogy is just perfect, isn't it? For the past couple of years, everyone, and I mean everyone, has been obsessed with buying the picks and shovels, the chips, the hardware. But the smart money? They're not betting on the tool sellers anymore. They're betting on the miners who have set up shop and are actually starting to pull gold out of the ground. The value is shifting from the build-out to the execution. So let's start with the story that I think we all know, the one that completely defined 2025. It's the story of hardware, of chips. Yep, the story of the shovel makers. I mean, just look at this number, $3.34 trillion. That was the moment NVIDIA, for a time, became the most valuable company on the entire planet. It's just a staggering figure, and it perfectly captures the market's complete obsession with the tools you need to build AI. And the narrative was so simple, right? If you wanted to play in the AI revolution, you needed GPUs, and you needed a lot of them. This kicked off an incredible gold rush for chips, and companies like NVIDIA just reaped all the rewards. This is the world you know, but I'm telling you, it's not the world of tomorrow. And that brings us to the most important part of this entire explainer. The value chain is making a fundamental pivot. It's shifting away from just building AI and moving towards actually using AI. This is that hidden shift that changes the entire investment game. Okay, so you've got to understand the difference between training and inference. Think of it like this. Training is like building a giant factory. It's a massive one-time cost. That was the whole story of 2025. But inference? That's the factory actually running. That's the constant day-to-day operation where the AI does real work and creates real value. And for 2026 and beyond, the money isn't just in owning the factory, it's in what that factory can produce. Now, this isn't some small tweak. People are calling this the industrialization of inference. And the economic engine behind it is honestly mind-blowing. The cost to actually use the AI, the cost per million tokens it processes, has absolutely cratered, making these complex, continuous AI operations profitable for the very first time. We're shifting from static software tools to what you could call outcome as a service, where an AI literally does an entire job for you. So what does this industrialization actually look like in the real world? Well, it looks like the rise of autonomous AI agents. These things are the true engines that are going to drive this whole new inference economy. An agent is so much more than a chatbot. It is a genuine workflow automator. Just imagine giving it a complex goal like, hey, analyze all our Q3 sales data, find the top 3 underperforming regions, and then go ahead and draft an email to those managers with a summary. The agent just does it. It connects to your systems, it figures out a plan, it executes tasks across different apps, and then it delivers the final outcome, all by itself. That is the game changer. And listen, this isn't some sci-fi pipe dream. This is happening right now, and it's happening incredibly fast. In 2025, you had about 11% of companies using agents in production. But by the end of 2026, that number is projected to jump to 40%. That kind of explosive growth is a huge signal that there's a fundamental shift happening in how businesses operate and where they're choosing to invest. But, and there's always a but, as this whole shift to inference and agents picks up speed, we're smashing right into a whole new set of problems. You know, there's this myth that AI is just this digital thing floating around in the cloud. The reality? It's a business of atoms. It's grounded in the physical world. This quote really says it all. The exponential growth of AI isn't being held back by code. It's being held back by concrete, by steel, by power, and by water. You can't just snap your fingers and have a data center up here. It takes permits, massive power grids, complex cooling systems, and highly specialized construction. These are the new, very real-world roadblocks. The bottleneck has completely moved. It's not about who can buy the most GPUs anymore. Nope. The new choke points are physical things. Finding enough power for gigawatt-scale grids, getting enough water for these insane cooling systems, and just being able to build these massive, specialized facilities fast enough. And all of this leads us to a really critical point. All this spending, all this building, all this hype, it's creating this enormous gap between the money being poured in and the actual money being made. And that gap is setting the stage for what looks like a 2026 reckoning. This chart shows you the crazy disconnect at the heart of the market right now. Global AI spending is on track to hit more than $2.5 trillion in 2026, but the actual new revenue it's generating, it's only around $100 billion. Capital is just flooding into the space, but the real-world profits are not keeping up. This creates a huge problem with return on invested capital, and well, that's just not sustainable. And hey, don't just take my word for it. The asset management firm GMO is calling this an extreme bubble. The pressure is seriously building. If companies can't prove they're getting a real return on all this capital they've invested, the market's patience is going to run out, and we could see a pretty painful correction. The danger is that so many of these valuations are priced for absolute flawless perfection. You look at a company like Palantir trading at 110 times its sales, or Tesla at over 300 times its earnings. I mean, there is literally zero room for error priced into these stocks. And here's the brutal truth of it. The vast majority of retail investors, totally caught up in that 2025 story, are going to keep holding these legacy hardware stocks right through this reckoning. They're going to see the peak of the hardware cycle and think it's a foundation, not realizing the ground has completely shifted from under them. It's a classic trap. But look, this explainer isn't meant to scare you. It's about giving you clarity. So let's talk about where the new opportunities are. Let's look at the new playbook for this next chapter of the AI cycle. So what are the new picks and shovels? They're the things that are absolutely critical to making this whole inference economy work. We're talking about thermal management from companies like Vertiv that keep these massive data centers from melting down. We're talking high-speed networking, the actual power grid itself, and even the companies like EMCOR that physically build these giant facilities. These are the players you can't do without in the next wave. So we'll end with this question for you to think about. The AI gold rush is far, far from over, but the rules of the game have changed. The value has moved from the chip makers to the agents and the physical infrastructure that makes them all possible. So the question you really have to ask yourself is, are you still investing in yesterday's shovels, or are you funding the power, the water, and the networks for the mines that are going to produce real value for the next decade?